I would say it makes sense if you look at it from a long-term perspective on trading that core commodity that cannot be duplicated. Yes, it's hypothecated in a paper market, but if you want to hold the physical gold, and you now is a larger economy or someone like Saudi Arabia and says, if we're going to sell 10 million barrels of oil every day, we're going to do that for 2 years. We want to turn that into something that's going to have tangible purchasing power on 100 different products over, say, 50 different countries. What else can you use, Daniela? I don't see Bitcoin as being that. That's why gold, there's nowhere else to go.
Most investors think gold's recent surge to $3,400 is just another bull run. They're wrong. What's happening right now is the culmination of a 40-year imbalance that's finally being corrected, and it points to one inevitable conclusion. $4,000 gold is coming. The key to understanding this lies in a forgotten relationship between oil and gold that dates back to 1980. When this connection was first broken, it set the stage for decades of suppressed gold prices. Now, as this relationship returns to its natural state, we're witnessing what could be the most significant precious metals move in modern history. In a recent interview, market analyst Gianni Kovacevic breaks down this fascinating relationship, explaining why the current gold rally isn't just another bull market. It's a historic rebalancing that's been 40 years in the making. Don't forget to like, share, subscribe, and leave a comment. We read everyone. Let's dive into the video.
Gianni, let's talk gold now. I know obviously it's a metal you track closely here. As we're speaking, it's holding near $3,416 an ounce. We'll see where it is once this video airs. But overall, look, it's had an outstanding year. Where do you see it headed?
Gold is an asset class. Everyone's sort of probably following and listening to the same things. Jeffrey Goodluck just did a really good discussion with Bloomberg a week ago. I would guess anyone that followed gold has seen that. But let's go back to 1980. The gold price reached an all-time high on January 14th. I believe it was the 14th of 1980. Now, if you look at the way gold performed during the Carter administration, 76 to 77, it was 150, 200 bucks, and it just had that parabolic takeoff. And it was a talking point. On that same day, Ronald Reagan was interviewed by William F. Buckley Jr. on firing line. He was running to be president of the United States. He was not even a front runner. And they were joking in the beginning, in the preamble. He says that Ronald Reagan promised to visit every hamlet in New Hampshire because he wanted everyone to know who he was. Second or third question, William Buckley asks him, OPEC this week has raised the oil price to $50. Remember, this is 1980, January 1980. What would you do? If you're president, what would you do? And there's anything that we can do. And he says, okay. Many people think that OPEC is in a back room making schemes and trying to collude and how they can, basically corner the oil market or have shortages. And he says, but maybe there's something else happening. The deal was always that OPEC oil was going to be priced in US dollars. And before that, when Ibn Saud and the first barrel of oil left Saudi Arabia, they typically wanted to be paid in gold. This promise was made that it would be done in the US dollar with OPEC. And all of a sudden, that promise started to break down because the deal was they would give 10 barrels of oil for $35 and you could buy an ounce of gold. All of a sudden, that totally broke down. And Ronald Reagan, he said this. He said this on TV. He says, maybe what they're telling us is that we're not going to play this game. We see the US dollar losing all of its purchasing power. If we give you 10 barrels of oil, we want to have at least the approximation of the ability to buy 1 ounce of gold. Oil was $50 on that day, times 10 would be $500. Now, gold had a spike, had that spike to $800. If you do an inflation-adjusted calculation today from that price, it's about a 4x you get on it. You come up with $3,450. People have seen that. Where is the price of oil today as we speak? $72. It takes now 45 barrels of oil when they sell, Saudi Arabia, for example, and then they can transfer that into buying 1 ounce of gold. That was not the case until this last little, finally, gold caught up. People were always scratching their heads and wondering what's going on. Could it go through 2,000? It very quickly went to 3, and here we are at around $3,400. I would say it makes sense if you look at it from a long-term perspective on trading that core commodity that cannot be duplicated. Yes, it's hypothecated in a paper market, but if you want to hold the physical gold, and you now is a larger economy or someone like Saudi Arabia and says, if we're going to sell 10 million barrels of oil every day. We're going to do that for 2 years. We want to turn that into something that's going to have tangible purchasing power on 100 different products over, say, 50 different countries. What else can you use, Daniela? I don't see Bitcoin as being that. That's why gold. There's nowhere else to go. I think that's why
nowhere else to go but gold.
Nowhere to go. Otherwise, you're basically buying a basket of other currencies.
So you're, Gianni, bullish, super bullish gold here.
I would say stable foundation. It's a foundation. People should have.
So when Goldman Sachs, banks coming out calling for 4,000 year end, you think that's a probable target?
Well, what does it have to go up now? 12%, 13% to do that? Yeah. Before it was a little bit fantastical. People used to think that, even in Good Luck was saying that it used to be like nuts and speculation. It's a lot of really smart people are looking at it that way. And I think it's always been there. You had the scenario where central bankers were selling the gold.
Yeah.
It was an endless inventory of people that wanted to be long gold. It was an endless inventory. And we have, with Gordon Brown and the government of Canada, where are they now? That's, hard to get that gold back. And at the time, I think the central banker of Russia, Mrs. Elvira, they were always buyers. The Russians were
China
always buyers.
China certainly has it, Gianni, way more than any of us know.
It's the trade. It's went from the west to the east and is never coming back. The gold that's there.
We're witnessing more than a bull market. We're seeing the restoration of gold's proper role in the global monetary system. The 10-to-1 oil-gold ratio that Reagan identified is fighting to reassert itself after 4 decades of suppression. Central banks have stopped selling and started buying. Commodity producers are demanding real value for their resources. The mathematical relationship between oil and gold is finally being restored to its natural state. This isn't about inflation or interest rates. It's about the fundamental need for stable purchasing power in international trade. And that inevitably points to one conclusion. Gold's journey to $4,000 isn't a target, it's a destination. The 40-year imbalance is ending. The question isn't whether gold will reach $4,000. It's how quickly this historic correction will unfold. What's your take on this oil-gold relationship? Are we seeing the beginning of a new monetary era? Drop your thoughts in the comments below. And if this analysis opened your eyes to gold's true potential, smash that like button, subscribe for more market insights, and hit the notification bell so you never miss our latest precious metals deep dive.